From Middle East tensions to the race for electrification, resources are at the heart of today's market story. Are real assets a short-term trade or a long-term necessity? And what hidden themes could shape the next decade for investors? Well, we're going to answer those questions and connect all those dots right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you for joining us today. Paul Baiocchi, who's the chief ETF strategist from our partners at SS&C Alps, is here in the studio with me for the first time in a while. So, Paul, welcome back. Good to see you.
Always good to see you, my man.
Obviously, every time you've come here, we've talked about resources and energy and oil and, copper, gold, the whole, commodities gamut. But, now we're in the middle of this Iran conflict, which as of this point, there doesn't seem to be a real end in sight, although talks continue to go on. We keep bringing up the concept of real assets, and what we say by real assets is, just to give our audience the heads up, is, real assets, they're physical, they have intrinsic value, they're things like infrastructure, they're things like materials, et cetera. Do real assets have a place in a portfolio given the volatility in the markets that we're seeing because of the conflict and sort of the back and forth? Oil's up a lot. We've got gold continuing to make daily highs and making headlines. What's your thought on the real asset market right now?
So I think if nothing else, the conflict in Iran has shown a big spotlight on the important role of real assets in a portfolio, and specifically commodities as a diversifier. Now, if you look at the chart, which shows the energy or the oil intensity of GDP, what you can see is it's been declining over the course of the past 25, 30 years. And in many ways, that's emblematic of an economic evolution that started perhaps 20, 25 years ago. Doesn't reduce the pain that countries and economies are feeling based on the Strait of Hormuz being shut down, because it's not only an important pathway for oil and LNG, it's also an important pathway for other global natural resources. And so the conflict in Iran in many ways is exacerbating a lot of the challenges that we saw even ahead of the conflict, which is resource scarcity and emerging new demand sources for key materials, key minerals that are all a piece of an economic evolution that's ongoing. Electrification, the search for power, the search for ways to generate that power that aren't as beholden to geopolitically unstable parts of the world.
Well, assuming we do get a resolution to the conflict, which we all hope will happen, what comes next? How does it actually impact these categories, these commodities, minerals, these real assets that we're talking about?
Well, I think if you read the headlines and some of the statements from some of the countries around the world, one of the key takeaways for them is, how do we race from an investment perspective, from an infrastructure perspective, to get to a place where if this does happen again, we're not going to be as impacted by it. That means significant investment in infrastructure as well as technologies to support their power ambitions. So you think about, for example, Saudi Arabia has this Fallujah pipeline, which circumvents the Strait of Hormuz. It's about 7 million barrels a day, so it's offset a little bit of the shutdown in the Strait of Hormuz, but the likelihood of the Saudis going in and spending significant amount of capex to either expand that pipeline or to augment that pipeline. The UAE also has a pipeline that runs south and circumvents the Strait of Hormuz. It's a pretty small pipeline, so they're going to invest in expanding it, augmenting it, so that they're not as beholden to this very critical, very specific piece of geography. And in that way, you just think about the amount of steel, the amount of components that are going to go into building a pipeline like that. And then you expand out to countries in Europe, countries in Asia, who are probably thinking, okay, if this conflict does have a resolution, how do we ensure that if this does happen again, we're not as exposed? And so you start investing in, say, renewable technologies, start investing in batteries and storage at scale, all of which put additional pressure on the key resources that are at the core of this economic evolution. And in many ways, it speaks to the knife's edge that a lot of these commodities live on an ongoing basis, even before the conflict.
It sounds like you're already pre-answering the question I'm about to ask you, which is, so you do think that this story is less cyclical in nature and more of a longer term theme, right?
Without a doubt. And you look at copper, which is a great example of a commodity that's historically been called Dr. Copper, because it's been viewed as a cyclical indicator of economic health globally. And when copper's doing well, it's a sign the economy's doing well. When it's not doing so well, maybe it's a signal that the economy globally is breaking down. But you have these secular trends in copper where all of these new emerging demand sources are competing for the same scarce resource. We've seen significant underinvestment in refining capacity, production capacity globally. The length of time between when you start a copper mine, therefore, when you begin the process of taking what is exploration and getting to production, is anywhere from 8 to 10 years. So that lag means that it's not as easy to just ramp up copper production, and you need it for transmission lines. You need it for the electrification theme we talked about on the last video. And so it's emblematic of a sea change we believe is more secular in nature. And so the hope is that advisors and investors don't, if we do get a resolution, just take a deep breath and say, okay, that's behind us. Commodities no longer in focus. They realize just how fraught these markets are and how critical they are from a portfolio perspective and an asset allocation perspective.
Yeah, I feel like the average person, myself included, until I started doing some research before you came today, I didn't realize how critical copper was to the electrification of not only the grid, but like electric vehicles, for example. And it really does play a crucial role in the development of clean energy, which is exactly what you're saying is a potential direction for a lot of countries to go, to maybe have not so much reliance on foreign oil.
Without a doubt. And we've been presenting a lot recently to advisors on the idea of electrification. And one of the slides we use is a Bloomberg NEF forecast of grid investment over the course of the next, let's call it 25 years. And the expectation was we're going to be at $100 billion annually by 2030 in just investment in the grid. And oh, by the way, in 2025, we spent $115 billion. So you start have to rearranging some of your forecasts and upping them. And that speaks to the massive amount of demand that's coming for these scarce commodities.
What are maybe some hidden resource themes that investors could be thinking about? If you look at the big picture, there's obviously a lot to choose from, and we're only scratching the surface here. What are you talking about when investors come to you looking for ideas?
Well, there's been an explosion in application in California and in Texas and globally, for that matter, in enterprise storage solutions, so big batteries. And those require copper, they require nickel, but they also require a lot of other scarce resources, specifically rare earths. And China right now accounts for about 90% or so of the global refining capacity for those rare earths. They're not that rare in terms of where they exist in nature, but they're rare in terms of your ability to refine and process them. They're dirty, they're economically and environmentally pretty challenging. And so you think about that component of the energy evolution and the energy transition. You also, when you think about some of the emerging sources of demand that we've talked about, the CapEx spend from the hyperscalers, from AI data centers, from AI-oriented companies, a lot of that money is going into a lot of these infrastructure investments that require a lot of these natural resources. Energy is evolving in terms of how we define it, how we think about it. It's evolving more from energy to maybe power. And in that way, nuclear and uranium as a part of that nuclear story is becoming a bigger and bigger piece of the puzzle, because first and foremost, like rare earths, there's a lot of concentration in where uranium is actually processed and refined, and in many cases in geopolitically unstable pieces of the world. So you've got this, I don't want to call it a toxic mix, but a very complex mix of supply and demand dynamics, geopolitical dynamics, and of course, an evolving economy that is putting pressure on these already challenged supply and demand dynamics across the resource market.
Right, because the supply chain for critical minerals is pretty tight.
Yes.
Yeah.
Without
Which
a doubt.
leads to kind of longer term price stability in some ways?
Sure, and near-term price volatility.
Right,
in
that's
certain
right.
instances. Like, for example, people focus on the Strait of Hormuz and they think about oil and LNG, which is the right thing to focus on because that's what captures the headlines. It's still very much part and parcel of the global economy, even though we just showed how oil intensity of GDP has gone down.
Right.
The flip side is that electricity intensity of GDP is expected to increase in the coming decades. So for the first time in a long time, the amount of electricity we need to generate the same amount of GDP is actually increasing, and that has implications. And importantly, when you think about the Strait of Hormuz, things like helium move through there, which is important for semiconductor manufacturing. Urea moves through there, aluminum moves through there, fertilizer moves through there. So there's a lot of noise, if you will, in global commodities markets that we believe isn't going away. And there's going to be not just geopolitical premiums in a lot of these prices, but some sort of infrastructure investment premium, because all of these countries, like we talked about earlier, are going to be scrambling to invest in infrastructure and technologies to insulate them from a conflict like this. And that's going to put additional pressure on these commodities prices.
Right. Paul, thank you. What a very timely discussion and topic for obvious reasons. Love to get you back because there's so much more on the infrastructure side. We barely scratched the surface on water, and it's first of all the scarcity of water and the need for water as a natural resource these days. Anyway, we'd love to have you back and talk more about that.
Look forward to it.
Good to see you. Paul
Likewise.
Baiocchi again from SS&C Alps Advisors, and thank you all for joining us. There's a lot more information coming out of UBS and our Chief Investment Office at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, check out our dedicated studio channel on Instagram. Follow us at UBS Trending. Great content there for you. And as always, if you have any questions about what Paul and I spoke about today, I'm sure you might, because there was certainly a lot of topics we covered today, make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everyone. And remember to keep your eyes on what's trending. We'll see you soon.